So the bank's reporting season kicks off today. Westpac, first cab off the rank. What sort of a news is going to be followed, do you think?
Well, I think there's going to be two good pieces of news. I think the half-year cash profit's going to be around $3.3 billion. Big improvement on the last number. I think the last number was around 900 million. So a big improvement. And also, Pete, we're going to hear some great news on dividends as well. And this is all linked to the fact that they put a whole lot of bad debt provisions in, this time last year because of the coronavirus, and the economic rebound's been so strong. Banks haven't been required to do the sort of things that they're expected to do for the rescue, and the bad debts haven't been as bad. So it's going to be very interesting to see how good those numbers are, and more importantly for both superannuation investors and investors generally, what the dividends are going to look like.
Yeah, well, I was just talking about this with Stephen Daglin a short time ago. So it's Westpac and NAB this week, right?
Exactly, yeah. And today Westpac comes out.
Yeah, okay. Meanwhile, Netflix's tax bill looking a bit cheap, Pete.
Yes, it is, isn't it? Look, it's good to see that they're prepared to fess up for what their tax bill is. It was around $550,000, but the estimate of their revenue ranges somewhere between 700 million and 1.4 billion. And the reason why the tax bill is so low is that headquarters for Netflix, a US company, is in the Netherlands, which is a low tax regime. And so they basically, they pay a service charge to income to the local Netflix version, Australia's Netflix, but it's not very much money, $14 million or something like that. And the consequences is that what we actually pay here in tax, or Netflix pays here in tax, is really, really low. And it seems to me, Pete, when you got US President Joe Biden, crusading to save the world from climate damage, maybe he should also put a bit of attention to getting these big US companies like Apple and Netflix and so on, to pay their right level of tax. We could use that tax money to find alternative sources of energy to make it much easier to do what we want to do, to save the world from climate damage, the emergency that they're talking about.
What about, that Amazon share is about $3,500 a share US. It was 2,000 a couple of months ago.
Yeah, and they make profit now too, Pete.
Yeah.
The profits are so big they have to actually pay, admit to profit and not use it for just expanding what is an unbelievable organisation.
Still on stocks, Pete. Do we sell in May and go away?
Yeah, that's the old cliche, Pete. Look, the thing is if you look at the stock market between May and November, it is the worst half year. The best half year is November through to April. But even then, in that period, May to November, the market still goes up. And it's interesting, in Australia, one of our best months is July. And that, of course, that's June 30, end of the financial year. Yeah. A lot of the funds sort of tidy up their funds. As soon as it's all over, they claim their tax deductions on their losses, and bang, they use that money then to buy more in July. But I think, given the magnitude of economic growth, I think this period is still going to be pretty good for stocks.
So why would it flatten out then, Pete? Can you explain that from May to November? What's the reasoning behind that?
Yeah, well, the history was, before the internet, the stockbrokers of the world and the fund managers of the world, they went on holidays in summer in the Northern Hemisphere. Okay. And they basically just squared up their books because they couldn't really play the market. So I was sitting on the beach in Nantucket or in Saint-Tropez or something. And so, but now in the age of the internet, they can. So it's not as much a big an issue. But the old saying was, Pete, sell in May, go away, come back on St. Ledger's Day, which is a famous race day in the UK around September 14 or so. Don't you love the old world? It was terrific.